Uh, Hopefully, you all have been enjoying your summer. I'm just trying to, I don't seem to have my little window box here. Look, I forgot how to use Zoom while we're off on holidays, but here we go. Hey, I'm back. There we are. Hopefully everyone had a great month of great weather. Obviously, we're back now, a little cooler as we go into mid-August, but we have a lot to catch up on that we missed. So we'll dive into things, but before we get started, as always, these videos are for information purposes only. Don't use them as advice. If you want to implement a financial plan or have any questions, always feel free to reach out to us. You can reach us at mikeonmoney.com. Or do your own due diligence, but make sure you double check everything. We try to keep the information as up to date as possible. But as we know, especially these days, information changes pretty quickly on the regular. As always, this is a refresher. We're using Zoom, so all your audio and videos are muted, so we can't hear you, so don't worry about any background noise. If you do want to ask a question, just go to that little Q&A box, click there, and you can type a question. We'll generally try to get to the questions in today's session. If it goes a little long, I will make sure to get back to you by phone or email with follow-ups. But feel free to ask questions. If you think any questions afterwards, always feel free to reach out and email or call us. And if you're watching this on the replay, same thing. We are working all normal hours, so feel free to reach out to us. So we're going to dive into an update. As mentioned, our last session, I think, was July 7th, around that date. So a lot's happened. First of all, sports are back. So, that's great. I know a lot of people are getting their fill on sports. Of course, we've got the basketball, hockey. We got the Canucks here, made it in past the qualifier into the playoffs, which I think Bonnie Henry's going to have an announcement before the first Wednesday's game as to how many people are allowed on the Vancouver bandwagon before they get started. But that's good. At least some new entertainment out there for everybody who might have been suffering a little bit of sports withdrawal. Of course, other exciting news. We've got the U.S. banning TikTok, which I know for this group is a big upset. We're not going to have that entertainment anymore. If you don't know what TikTok is, congratulations. You're doing much better than everybody else. Anyway, a lot of things have been happening. We're going to touch on kind of where we're at today and where things are headed, and a little bit what's been going on over the last little bit. What's going on with the coronavirus? So it's all gone. It's all better. 1 month later, everything's fixed. Actually, no, of course. We've got a lot of catching up to do on where we are on those trends. As far as what's happening this week, we're starting to see some new economic numbers come out. That's why we paused there for a month. Pretty slow as far as economics news goes. But we do have some new retail numbers coming out, and of course the manufacturing index coming out for June later this week. As far as coronavirus updates, the infections in some areas of the U.S. have started to downtrend, which is good. There's still the hot spots that they're dealing with, and the numbers are still very large. We're going to look at those, but we've seen just in this last week, some areas we've started to see the infections start to slow down a little bit. That's partially due to some, reinstating some closures, and that reinstatement of closures is going to affect a lot of numbers that we see coming out, like unemployment and economic sales, retail sales, and business numbers. Of course, Trump over the weekend signed a bunch of executive orders. One was about stimulus packages, because of course Congress and the Senate, the Congress hasn't been able to come to an agreement, and that's between the Republicans and the Democrats. Republicans reportedly coming in a little late with their plan, so they're still going back and forth on what that's going to look like, and most of it's squared around the unemployment top up. So the U.S., if you're not aware, had a $600 a month top up to the unemployment numbers, whether to continue that, reduce that. So there's a lot of back and forth around that number. The Trump's executive order reduced it to $300, but continued it. Good or bad, I guess, depends on your side of the coin. And the other big part as well was the eviction plan, because in the U.S., very different than Canada, had a fairly unequal eviction structure. So they put, people could not be evicted, but only for housing that was backed by a federal insured mortgage, which is only represents about, the last number I heard, so don't quote me on this one, but the last number I heard was somewhere around 20 to 30% of properties out there. So it wasn't protecting everyone from eviction. And also the rent holiday or the rent, where people didn't have to pay their rent, it was accumulative. So the rent wasn't forgiven. So landlords could forgive it, of course, if they wanted to. But in most cases, it was just accumulating. So if you hadn't paid rent for the last 3 months, you owe 3 months plus the new rent, so 4 months rent all at once. Otherwise, you'd face eviction. In the U.S., evictions do go on your credit reports, which of course affects employment and also your ability to get a new place, because when you go to apply for a new place to rent, they do a credit check on you. So the eviction situation in the U.S. is dire. A lot of people could be facing eviction in the next month, and of course that doesn't help with the unemployment rates and economic recovery, et cetera, et cetera. So one of Trump's stimulus orders was really, it was just an order. He positioned it that he put a stop to evictions, but actually reading the reports of the actual order was simply that Congress had to deal with it. So there was actually no law put in to say there would be or a stay on evictions, just simply that it was going to be had to be dealt with one way or another. Now, that all being said, as it says here, there's some squabbling over this, because there is a bit of debate whether he can legally do this, because it kind of bypasses Congress's power. So can he even do that? That's all being argued today, or yesterday and today. And now we get into politics, because of course, if Congress quashes them, how does that look politically? Saying, yeah, this might have been good for some people, they quashed it, versus, do they have their own plan approved, or can they come out with their own plan and approve it? So a lot of back and forth around what's going on with the next stimulus package out of the US, or the continuation, or what that looks like out of the US. And probably nothing that's going to be cleared up, immediately. But it did give a bit of a reprieve for those unemployment claims in the US. That $300 at least continuing, as opposed, now that's a drop from 600, but still better than zero. Also, the latest research, we're seeing this as some schools are starting to open in the US. Children are carrying the virus. There was some speculation or some hope, I think, that kids were immune or weren't affected by it, but more and more research is coming out to prove that that's not the case. Not only is the rates of infection, the largest group of infectious rate is teenagers these days, and then also younger kids are showing to carry as well. So that of course concern around the back to school argument, which there's tons of, both for and against going back to school. Every province here in Canada has got a different plan. In the US, they're pretty much moving forward. There's debate about whether to wear the kids should wear a mask or not, how social distance is going to happen, et cetera, et cetera. So a lot of debate going around that. We'll try to keep everyone up to date. Here in BC, they've started to roll things out, talking about the kids going back to school. I think the latest I've heard is age 10 and above will be required or asked to wear a mask. and of course, a lot of social distance protocols. So a lot of activities that might have happened before won't be happening, etc. But again, it's still a lot of information coming out and always changing as we get closer and closer to back to school, which is only a few weeks away, much to my children's chagrin, even if it's online. Obviously, when we talk about the coronavirus with the housing and unemployment, the numbers are clearly showing that Black, Hispanic, and minorities are much more impacted, biggest impacted percentage of the population. That's a huge concern as a society in general, and of course with the Black Lives Matter and equal treatment being on the forefront of everyone's mind, as it should be. There's a lot of pressure on governments and the packages to address that. We've not seen anything stable come through from that front. In fact, we've seen a couple of changes by the U.S. administration on the housing and low-income housing projects actually make things worse. So a lot of debate going on around that as far as this goes. And we'll probably see that into the fall if we do go into a second wave continue. Bigger projects are also being affected. A great example is the JFK Airport infrastructure makeover. $15 billion has been delayed due to coronavirus not being able to make it safe for workers. And that's the biggest thing I think that we need to pay attention to around these debates. And I'm going to touch on it in some other headlines in here, is really the workers. We talk about the schools, there's the kids, but then there's the teachers, right? Or the other people that help operate the school. And then of course the parents and the grandparents. That's really what, of course, we're monitoring is who are the most susceptible, who are the most likely to get, not just who are going to get infected, the kids are obviously in danger, but then who are most susceptible to the disease itself. So a lot of thought and policies are going to have to go in place to protect those. And that's where we're seeing some of the concerns here. So just to go into some updates of what's happening in the economy based on all this, a couple of news highlights from Uber. In Latin America, they've actually joined the cab, so they've gone the other way. And a lot of this has to do with, our point 2 here, which talks about the risks to the drivers. They're looking for more protections, more rights that they, under the contracts as Uber drivers or any contract worker, don't have the same rights and protections as an employee. So we saw in Latin America change sides, go the tax route. And that alongside with earning problems at Uber, we might see that continue to push that transition and maybe bring their technology to cabs as opposed to fight against the whole industry. And the risk that we're seeing there, this is an example where it's in the headlines, but again, this goes to any worker, whether they're at a grocery store, a restaurant, a nurse, a teacher. How can we keep the employees safe? The example here being a driver in the U.S. who's looking at potential expiry. We talked about the expiry of their extra unemployment benefits or the reduction. So what do? Do they not have enough income to pay rent or mortgage or for food, or do they go back to full-time work where they're at risk of catching COVID-19. So, and again, that applies to almost any worker who's exposed to the public in any real means and can't offer any kind of protection. And on top of that, of course, we're seeing a lot in the news, people who are refusing to help, whether they won't wear masks or they won't socially distance or, or even going beyond the, I'm not comfortable wearing a mask, so I'll social distance a bit better, or I'll limit, but, are going to the extremes of going and yelling and being violent and not respecting the people's rights who are trying to protect themselves. So, and we're seeing a lot more of that, which is very concerning. So I think we're going to see a lot of this when it comes to employees as we go into the fall, and teachers and unions obviously looking to protect their members as well as we go more and more into a reopening, but also more and more into a potentially a second wave. Now, when I say second wave, I might have touched on this before we left off in July, but we do fully expect the numbers to increase as we go into the fall. That doesn't necessarily mean a second wave. What we're talking about here is we're introducing more openings, we're introducing the kids potentially back to school. We're just having more people in contact with each other. So even with social distancing, it's increased numbers of contact, just means increased number of cases. The hope there is that we can still keep that curve flattened so that the fall increase does not spike beyond the previous high. If we can keep it, the wave even smaller than the last one, that's flattening the curve. That was the whole goal all the way along in the closures, was to spread it out so that people who might get infected do have access to hospital care. The hospitals don't get overwhelmed, and they can get proper treatment and recover. So we will 100% see numbers increase as we go into reopening, especially if the kids go back, because any parent knows kids carry germs. We will see spike in, increase in numbers, but we're just hoping we don't see that big next wave. And that's the second wave they're talking about. If the virus itself mutates, or the colder weather allows it to spread faster, that's the concern about a second wave. The Canadian dollar, we're going to talk a little bit more about currencies, but the Canadian dollar has been shifting a bit higher. We've seen commodity prices rise a bit. We're going to talk about those, which is always good for Canada, as we're very much a commodity-based dollar. But we've also seen a little bit of weakness in the US dollar as the markets have stayed higher, and we talked about that in July. We fully expect that as the market recovery came into play, as it stays a little bit higher, people move away from safety, which is the US currency, and move back into equities. But if we were to see a weakness in the market again, that trend would reverse and the US dollar would re-strengthen again. And the Canadian dollar will likely pull back a bit at that point, depending on what commodities are doing. But it certainly weaken against the US if we see that reversal in the markets. Other headlines we're seeing around the world. So China's industrial deflation ease. So this is China, remember from July. Of course, China went into their shutdown before us, so they reopened again ahead of us. So a little bit of a looking glass for us to be able to see what the reopening looks like. They, much like we expect here, we're going to get the manufacturing numbers at the end of this week. Very likely to see a bit of a surge on the reopenings, and that's the pent-up demand, which we did see that. We've seen it, then we saw it ease in China, and now it's starting to stabilize a little bit. On the flip side of that, we're seeing inflation start to increase, and higher food prices and other areas of the consumer price index. Just as the demand starts to pick back up again, the supply is still a little bit weak. That's kind of what we would have modeled out and we'd expect, and we're very likely to see that here in North America, whereas we get the early numbers out of the reopening are going to be that pent-up demand spike, a little bit of leveling off. Here we might see a little bit more of a dip afterwards, because of course we're doing some extra shutdowns, a secondary shutdown in some parts of the United States. Of course, that's going to affect the recovery, so that pullback might be a little sharper and last a little bit longer before it starts to pick back up again. So what we're seeing in China is kind of what we expected, and we should see that copy over here as well. As I mentioned, Trump's stimulus orders, set everyone to tizzy in Congress. And this has come up quite a bit recently. He had tweeted out, I can't remember, it's a week or two ago, about potentially delaying the election, which of course he does not have the power to do. It's within Congress. So there's a lot of people are concerned about how much power he's trying to use with executive orders, which bypass the Congress's power, which is given to them by the the Constitution. So a little bit of back and forth, but it's all up to Congress whether they want to fight that or not. It could be very political if they do. We're getting reports out of the U.S. National Security Advisors saying that China is targeting to influence the 2020 election. Not surprising, really, after what happened in 2016. All the reports, we're probably going to see more from China, more from Russia, more from a lot of countries. In fact, I've seen a list of about 4 or 5 countries that Security Advisor is monitoring as they've seen different influences to different degrees working towards the 2020 election. So we'll see a lot of that. We talked about the children's immunity and those numbers on the increase. Obviously a concern with going back to school. In other news, Elon Musk SpaceX advances. Obviously, they just brought back, if you followed, they were the first commercial company to deliver a crew to the International Space Station and bring them back. They just brought them back last week. And so they've secured some more goals and contracts to continue to do that service for the United States. And we've also seen news out of Virgin's space flights, tourist space flight, that Richard Branson plans to be one of the first passengers that takes the tourist trip to space. So more and more we're seeing that. It's a really interesting area to follow. They're doing it obviously much cheaper than the governments were doing it, more efficiently. So it's going to be really great to watch that progress. And of course, SpaceX is one of the premier companies on track for the Mars trip. So just look at the coronavirus numbers. Obviously, some big jumps since July. The world is over 20 million cases, almost 750,000 deaths, 741,000 deaths as of this morning. The US obviously gaining ground every day, 5.2 million. Infected, 166,000 deaths. Put that in perspective, when all this started in February, March, or that's not when it started, I guess when it all really started hitting the news, and the US government was basically saying, oh, it's going to go away. And the Fauci and his team were saying, you know, it could get as worse. And the worst predicted numbers were between 140,000 and 160,000. And where the US is now through 166, gaining about 1,000 a day on the death side. You know, with as a country, as we mentioned, some spots are getting a little better, but as a country, not really showing any slowdown on that. So still a lot of concern around there. Again, as I mentioned prior sessions, this list is not complete. I do truncate some countries out to make sure I can fit Canada on the slide, and we're at the bottom, which has actually looked great. You know, 120 infected, almost 9,000. But even a month ago, we were only just approaching that 9,000 number. We've not even got to the 10,000. So it's not great news, but it is more promising that the rates have slowed despite some increased numbers in the past couple of weeks, again, due to reopening. But things are still looking good in Canada. If you do want to see this, don't look at it daily. It can be depressing. But if you do want to follow some things, Worldometer is a great website for that's where I get this data. It's a great website to take a look at. If there's specific countries you want to see that I don't have on this list, they're all there, and you can click through to see which areas are more affected than others. So let's take a look at the market. So the S&P 500 and Dow rose last week and going into this week. We did see, though, a pullback in the last couple of weeks in the NASDAQ, and I mentioned that in July. Even in our portfolios, we were peeling off some profits out of the tech sector. That's what your NASDAQ represents. We did see a massive run on technology stocks, probably too much. There's some speculation now, could we go into a tech bubble like 2001? I don't think that's the case. I think there's real value in a lot of these tech companies. There's certainly some that are going to be more overvalued and speculative that should be cautious with. But we saw some great jumps. Apple, which is one of our bigger holdings, had a great leap forward. Microsoft is doing amazingly well. Visa, MasterCard, PayPal, which are all considered tech stocks, have done really well. So a little bit of profit taken there, which I think is a wise move. And we've seen a bit of a surge in the Dow in the US. And I say a bit, very slight upward trend through July, not almost flat, slightly upward trend for the most part in those two indexes, but certainly strength as we head here into August. The dollar, as I mentioned, the Canadian dollar had some advancement, and we talked about the Chinese factory numbers. Oil prices slightly up, really down, up, pretty flat, which we expect to hold there. And gold had a great run until this week, until yesterday. Lost a little bit of ground, but still over 2,000. And we'll dive a little bit more into that in a couple of slides here. Up in the U.S., we have the unemployment rates are coming in. They're expected to have risen to 10.5, so still in the strong double digits. They increased last month to 11.1. Non-payroll have risen by about 1.5, 1.6 million. After a 4.8 million increase in June. Those numbers are probably going to get a little bit worse over the next month, as I said, with that second round of closures in some areas continue to impact people. Wholesale inventory is expected to drop in June as well. Similar decline in May, and not surprising. July will probably be slightly better because we did have a little bit of open time where things were open, so we'll get that bump up, and then probably back down again with the second round of closures. So just a little bit of a rocky road. And that's exactly when we closed off in July, what we expect. A little bit of rocky through the summer of economic news. Put down here, Brazilian inflation is kind of increasing, expected to rise here in June after clocking almost 21% in June. So a big inflation increase. And that's a big concern we're watching, not just in the emerging markets like Brazil and parts of Asia, which tend to, even Mexico, which tends to have more inflation than, say, more mature economies like the US and Canada and Europe. But because of all the stimulus that's going out there, we are very likely, and we're seeing all the signs of inflation coming and increasing for a little while, which is why we're seeing gold move up. Gold is definitely an inflation hedge. We've got gold in the portfolios taking advantage of that or protecting against that. Something to keep an eye on, and certainly the emerging markets will show those signs earlier than more established economies. But that being said, we will very likely see inflation increase over the coming weeks and months. Other top news out of the U.S., McDonald's is soon an ousted CEO, so he got a big golden parachute after he got let go. Now they found proof of some sexual relationships, so the big lawsuit battle going on there. Microsoft dealing with that TikTok, as I was joking about earlier. TikTok, if you're not aware, is a social media platform, very popular with the younger generation. Which I'm told it's about talents in the arts and comedy and short videos. My children have told me I'm too old to have it, so I've never actually viewed it, but they tell me all about it. And of course, if you followed, Trump has been pushing to ban it in the US. It has been banned in India. And the big concern there is over the information that they're collecting and whether that's going to the Chinese government. So just to make it more complicated, Trump has said he would push to allow it to be bought out. So Microsoft is one of the lead bidders. They were looking at buying it potentially prior to this, or at least looking to buy the US side of it. Now they're looking at buying the whole company. There are rumors of potentially another bidder like Instagram coming to the table now. I believe the deadline that Trump put in place was September 15th to make that happen. That's a very short amount of time to do a transaction of what's being valued between 20 and 50 billion. I know that's a broad range, and those numbers are being thrown around. So it's tough, and there's a lot of controversy over whether he can even do that. And he's also asked that he get that the U.S. sorry, not him himself, but the U.S. Treasury gets a cut of the transaction, which again, very political to say that we're going to ban something, force a sale, and we get a commission to do that. So, or the U.S. gets a commission to do that. So, a lot of controversy around this. Very short turnaround. So we'll see how that goes. The Chinese government has promised to retaliate. So does that mean some U.S. companies get banned in China? We'll have to wait and see. Gilead has fallen for marketing application for remdesivir. Sorry, I'm not good with that names. That's the new drug that they developed as a treatment to the COVID-19. So not a cure, not a vaccine, but just a treatment process or a treatment remedy. So it was approved or got special approval for use in emergency cases. So they've started to use it now. They've applied to be able to market it, although I'm not sure what that marketing plan looks like. Do you have COVID? You should take this, because there's no other one that's been approved yet for treatment of COVID-19. So not a lot of competition, but that is moving forward. Tech giants back a legal challenge against Trump. So he's in the, I don't want to keep talking about Trump, but he's in the news a lot these days, or has been for the last month. He put into place banning new foreign workers to come over. So normally if you're a company, any company, not necessarily a tech company, but it's very predominant in the tech industry, when they're looking for special talent, especially in the tech area, so, you know, not a talent or experience that they can readily get, say in the US or Canada, there's special provisions that you can bring a worker over on a visa to work in the US under that claim that they have special education or special training or background that, you know, I just can't find the same quality here at home. So he put a temporary ban on that. And of course, that's affecting tech companies in particular, not only because they're growing right now, but that's a field where sometimes technology is constantly evolving and they might not have the education background here in the US yet, or necessarily the experience, because it might not have happened here in North America, or in this case in the US, or even more so that they can't get enough people with that experience here in the US and they have to look outside. So a bit of pushback around that. If you didn't follow through July, Kodak stock shot up, and I can't remember the final percentage, but it was a couple 100% in value, and it was all based on the US government giving them a $765 million loan for them to make drugs. So this is to make drugs in treatment of COVID and vaccines. So shifting some of their manufacturing, and their stock took off, and there's a lot of different reasons for that, which I won't dive into because it's fairly complicated and it would take a bit more time. But the key thing behind that is it started to shoot up before the announcement was made. So there's a lot of allegations of insider trading or advanced knowledge of this loan. So now the government's put that loan on hold pending the outcome of that investigation. So that basically the stock started to move up about, I believe the last numbers I saw, at least 3 or 4 days before the announcement was made official. And of course, acted on information that's not made public is the definition of insider trading. So a lot of controversy around that one. In Canada here, we've got the mortgage rate, the Canada Mortgage and Housing Corporation. It shows that housing starts fell by 210,000 units from July, and June fell 211,000. So slow down in new starts. And that's not a surprise, of course, when we went into all this. Not only did we do an economic shutdown, but builders, with the uncertainty of what was going to happen, slow down any projects that they could. So anything that was already past the point of stopping continued, a lot at a slower rate than previously, but no new projects were really being started. So not a big surprise. Those numbers are probably not going to improve, especially when we go into the fall months, because in Canada, of course, we have 4 seasons. So we always see a slowdown as we get into the fall, as a lot of parts of the country, weather doesn't permit to start housing. So those numbers probably aren't going to improve going into there. Canada Goose posted a loss. Expected to post a loss for the first quarter, but of course it was a little bit worse than everyone thought, and that's just on drop in sales. So Canada Goose, if you're not familiar, these big controversy actually around their product, around their down jackets, of course using goose down, but they're very popular, they're very expensive, so luxury item, and no surprise in that through all this, luxury items take a hit as people, buy less extravagant things when times are uncertain. So we'll see that a lot from any of the higher end product manufacturers or retailers. Miner Barrick Gold beat their expectations estimates for their profits. They put out a special dividend. They actually are doing a couple of acquisitions. A lot going on in the gold sector. As I mentioned, we've seen gold have a great run, and that's expected to continue for the next little while as we push inflation up. So Barrick just being one of the Canadian bigger ones. Canopy Growth, if you're not familiar with, is one of our Canada's cannabis companies. They posted a smaller loss, which is seen as positive these days. You didn't lose as much as we thought you were going to lose. So that's great. So we did see a demand increase of cannabis through the close down as people stay at home more, weren't at work. So sales have increased slightly, still quite a bit down on the year, and end of last year, the whole cannabis sector took a big hit, and they're still posting loss, but just not as much as expected. The Canadian Natural Resources bought Painted Pony, one of their competitors, and that's their resource oil and gas sector. We're going to see a lot of consolidation. We talked about this prior to turning off in July. Of course, the oil and gas sector been hit really hard with the May futures numbers going into the negative for oil pricing. And even with the recovery in the price of oil, which is bouncing around the 40 to 42 range, no expectation for that to rally anytime soon. We are still in a massive glut of supply in the world. Storage, we ran out of storage in May, which is why we saw it go to the negative temporarily, because there's nowhere to put the oil. People turned off, or countries turned off the taps to reduce the amount flowing into storage, but it's just the tap, or the proverbial tap. The oil's still there. It's all tapped. It's all drilled for. It would only take a country days to turn up supply again. So there's really no pricing pressure to raise it. And it takes all these countries to agree to turn off the supply in order to achieve this. And there's many of the oil countries that are really hurting out there economically. And even at a lower oil price, it's still revenue for them. And it'll be very likely that some of them break the agreement as to how much they're going to limit the oil in order to get extra revenue, even if it's at a lower price. So really no pressure whatsoever for oil to go up. I'm not favorable on the sector at all for the next little while. And I don't think we're going to see much improvement. We'll see a lot of consolidation by bigger companies that can sit on those assets, sit on those reserves until things improve, which could be a year or two. But the smaller companies will see more and more of them get bought up as they can't financially wait that long. On the currency side of things, I mentioned the US dollar, a little bit of weakness, steadied against Europe, which is good, but overall weakness that's expected to continue a little bit here, as I mentioned, as the market stays strong. What we're looking for weakness on the US dollar is, again, a pullback in the market. So we're going to talk a little bit about what we're expecting for March and going into September. In the US-China tensions on trade, of course, constantly up and down, causing fluctuations in the currency, and certainly not getting better over this whole TikTok situation. And in fact, could escalate even further if China retaliates further against the US. And we haven't seen what that's going to look like yet. So as I mentioned, the US economic data could also spark more volatility in their dollar based on, retail sales were expected out, and then industrial data that were expected out later this week. And that second wave we keep talking about could push pressure on the markets, which would drive up the US dollar. On the commodity front, as I mentioned, crude oil, it climbed slightly. This has really been an up and down story. As I mentioned, kind of that call of 42 average range has been moving around. We don't expect that to move anywhere. There's just not a lot of promise coming out of the oil sector. Gold, I mentioned, rally. We did see some weakness this morning, dropping. I can't remember the last number I saw was about $30-$40 an ounce, but still well above the $2,000 mark. Goldman Sachs just came out with their 2021 forecast to hit about 2,300 an ounce, and even a bigger forecast for 2022. And that's really driven by those inflationary pressures or real interest rate pressures. Of course, real interest rates moving up as inflation moves up. So that we expect to continue. We have it in our portfolios. If you don't have it in your portfolio, it's a great inflation hedge. You should have some exposure. Wouldn't overdo it, but definitely have some inflation risk there to protect against a rise in inflation market. So let's talk a little bit about where we're headed. If you've been following our things, I'm not a big fan of graphs, but I put this one here because I really thought it exemplified what we're trying to illustrate and what we're really expecting here. So if you look at that dark blue line, that's your S&P. So as you can see, the big fall in March, and then the recovery on the stimulus package. And in fact, we started to see a pullback again in June, and then a bit of recovery again as we expected that second stimulus package. And yes, it has been going back and forth between Congress and Senate, Republicans and Democrats, since June, which is part of the problem. A lot of accusations to the Republicans for delaying things and not working towards a solution. But anyway, that's political. The numbers just tell us that the markets have moved up specifically on the expectation of a second stimulus package. But if we look at all those other colored lines, the red, yellow, green, and blue, light blue, those are the expected earnings. So the forward yearly earnings we're expecting out of the markets. So if we look at just 2020, so that's the red line, we're still expecting the 2020 is the light blue line. We're expecting a 26% drop in companies' earnings due to the shutdown, due to the COVID. But the market is reflecting only a -4. So that's saying that the market is betting on government money to prop it up, not on actually economic health. So that's very tenuous, because if it does not get the government stimulus package, one that it wants, or good enough, or it doesn't last long enough, that's a lot of risk between -4 and -26 just for 2020. If we look into 2021, looking at kind of a recovery into 2021, it's still the earnings out to the end of 2021 are still expected to be 15% lower than when we went into COVID. And then if we go out to 2022, so kind of a full year of recovery, still -12 from those highs. So the market should be reflecting that we're nowhere near the earnings that the markets were at. So we are still expected a bumpy road, a pullback to better reflect where the earnings are actually coming in at. So still we're seeing the markets are overinflated. That does not mean you should not be invested at all. We have investments out there. We try to stay in areas that are better protected of that pullback, whose earnings are not being as highly affected. We've gone through those in the past. Some of the tech companies, some of your finance companies, Visa, even some banks. We haven't seen a run up in the Canadian banks. It's an area we still think is probably very favorable to put some money in after we see some more of that economic damage, because they will be affected by those loan write-downs. But that's an area where the revenues will probably return back very quickly. So still a lot of overvaluation in that market. I wouldn't be jumping in with both feet. Definitely, if you're in the market, that's fine. Take advantage of part of it, but do start taking profits out. Do start to ease out, especially in the higher risk areas of the market. Anything that's retail driven. As I mentioned, we've seen some spikes in some of those numbers. The car manufacturers put out some improved numbers. Most of that was just pent up demand catching up. It's probably going to fall off again pretty quickly after that pent-up demand is all chewed up again, because those unemployment numbers have not improved anywhere near they need to be. The GDP out of the U.S. came out while we were off the air there for that month, minus 33, biggest drop in history, bigger than the Great Depression. So now, will it last as long? Hopefully not. That's not what we see. But at the same time, there's some real economic damage out there. Take profits where you see it in the portfolios. Keep your toes in the water in areas that are going to be less affected. Doesn't mean they're going to be unaffected, just less affected. But stay there, good quality. Their earnings will keep you afloat and new highs. Don't chase after the ones that are falling the most. There's a reason they're falling the most. Look for the good quality ones that are pulling back, and that's what we're doing in the portfolios. Is buying on the dips. I know selling the high, buying the dip is a easy thing to say. It does take time. It does take patience. But that's what we're looking at for August. Is a lot of economic numbers that are going to come out. It's not going to reflect favorably on where the markets are, and we'll see that right into September. September's probably going to be where we see the most of that pain in the early part of September, as we get a lot of economics out in the beginning of the fall. And also a very likely spike in the infection due to, as we mentioned, going back to school and all these other things. So keep that in mind. I don't mean to be negative. In fact, I see this as a great opportunity. If you play this smart, this is very positive as far as investors go. And it's also positive in the sense there is recovery out there. We just got to be smart and pay attention to the experts. And I think things are going to be good. So as always, love to hear your feedback. Love to hear from you from any ideas you have or things you'd like us to cover in here. We are doing, we've been off a little bit on our Friday videos. I think we've only done one over the last month. We have a couple more coming out here with our Mike on Money updates, deep dives into different topics. If you want to hear a specific topic, let us know. Happy to address that as well. Any questions, anything you want to talk about, visit us at Mike on Money, give us a call, give us an email. We'd love to hear from you. As always, thank you very much. Feel free to share the link to this if someone missed out on it or you think someone would benefit from it. You're free to do so, and we're happy to help out where we can. With that, I'll let you go out and enjoy your sunny afternoon and your end of August. We'll talk to you again next week with the next update. Take care, all. Thank you.